What are digital assets and virtual currencies according to the IRS? Digital assets, including virtual currencies, are broadly defined by the Internal Revenue Service (IRS) as any digital representation of value which is recorded on a cryptographically secured distributed ledger or any similar technology as specified by the United States Secretary of the Treasury. As such, digital assets can include, but are not limited to, convertible virtual currency and cryptocurrency, which are unregulated digital currencies that can be used as a substitute for real and legally recognized currency, even though it does not have the status of legal tender. Stablecoins, which are cryptocurrencies that attempt to peg their market value to some external reference, such as the US dollar or the price of gold. Non-fungible tokens, NFTs, which are assets that have been tokenized through blockchain and assigned a unique identification code and metadata that distinguishes them from other tokens. The IRS does not equate digital assets with real currency because digital assets are not the paper and coin money in the United States or a foreign country, nor are they digitally issued by a government's central bank. A digital asset that has an equivalent value in real currency or acts as a substitute for real currency is referred to as convertible virtual currency by the IRS. A cryptocurrency is an example of a convertible virtual currency that can be used as payment for goods and services, digitally traded between users, and exchanged for or into real currencies or digital assets. From a U.S. federal tax perspective, digital assets are treated as property. As such, general tax principles applicable to property transactions apply to transactions using digital assets. This means that taxpayers must report their digital asset activity on their income tax return. A digital asset transaction can result in taxable gains and losses, as exemplified in the sale of a digital asset for legal tender, hard currency, the exchange of a digital asset for property, goods, or services, the exchange or trade of one digital asset for another digital asset, the receipt of a digital asset as payment for goods or services, the receipt of a new digital asset as a result of a hard fork, such as a split of cryptocurrency through blockchain procedures, the receipt of a new digital asset as a result of mining, a complex computational process to generate further Bitcoin or alternate cryptocurrencies, or staking activities, locking up one's digital assets so as to receive more cryptocurrency. The receipt of a digital asset as a result of an airdrop, a marketing strategy that divvies out free Bitcoin or alternate cryptocurrencies, any other disposition of a financial interest in a digital asset, the receipt or transfer of a digital asset for free without providing any consideration that does not qualify as a bona fide gift, transferring a digital asset as a bona fide gift if the donor exceeds the annual gift exclusion amount. The Internal Revenue Service is continually putting forth ever more literature on digital assets and virtual currencies from a tax standpoint, with IRS Notice 2014-21 being a solid starting point for most taxpayers. Thank you.